All right. Hi, everyone. Dan here from Edge Small Business Consulting. Today, I'm doing another Q&A session with Megan Hunt from Third Space Accountants. How you going?
Hey Dan, good. How are you?
Good, thanks. Today, we're just going to run through a few questions with Megan around end of financial year and just a few of the, I guess, tricks and tips that the accountants can offer for us. Does that sound all right?
Yep, let's do it.
All right, perfect. So I'll get straight into it. So the first question I had was, with the end of financial year sort of coming up, um, in a few weeks, what are some of the tips that some of the small business owners can get from you with regard to preparing their year-end reports and things?
Yeah, so we primarily work with small businesses, same as you do, Dan. So the one of the key things with it is actually sitting down and working out what you estimate your profit's going to be. That's kind of the first step before you can go into strategies around how to minimize tax and this and that. You kind of need to work out, well, what are the numbers we're even looking at? Do we even have any tax to pay at all this year? Did we have a good year? Did we have a bad year? However it's sort of looking. And then obviously your structures play a big part as well. If you've got a trust that you're operating your small business out of, we got to work out who's going to be distributed the funds from that trust. We know that trust can't pay tax the same way that a company will pay tax or an individual will pay tax. So it's just about seeing who's in the family, maybe what other entities are involved, where's going to be the best place to distribute those profits to. If you're making $200,000, $300,000 net profit, we don't really want to be distributing that 100% to one person if we have some other options, So kind of understanding your trust side of things and getting your trust minutes sorted. Again, if you're operating out through a company, maybe just working out, well, your company, if it's a small business, might be paying tax at 25%. And then you might have a couple of owners working in the business, understanding what income the owners might have. If they're not earning any income, you're probably going to want to pay across at least some kind of a wage, to use up at a minimum your tax-free threshold amount of about 20 grand, right? So it's just kind of planning that out, because if you sort of leave all those things until 30 June or after, you're really not giving yourself any time to get it organized, right? You kind of want to do that stuff now. We're about to tick over to 1st of June tomorrow. We've got 4 weeks left to organize all that stuff now so that you're not left kind of stuck at the last minute. A couple of other things, obviously you've got your asset write-off stuff. So we know that the asset write-off is not ending, but reducing significantly on the 30th of June. So if you need new trucks, if you need new equipment, office equipment, bits and pieces, and you're going to buy it at some point anyway in the future, maybe bring that forward a couple of months and get it now while you can write it all off in this financial year and reduce that taxable income down. You don't want to be going and buying stuff just for the sake of it. Dan and I were just talking about this before we jumped on the recording. But if you're in a 30% tax bracket and you're going and spending $100 on something, you're only going to get back $30 of that $100. You're still spending the other $70, right? So don't I know Officeworks and your car dealership and whatever might plus all the advertising up, making it out to seem as if you go and spend $100 and you get $100 back. That's not how it works. So just sort of understanding that. But if there is things that you do need, bring it forward a little bit, buy it now. And then another big one that a lot of small business owners will utilize is their superannuation contributions. So most people can put in sort of that $27,500 in this year and claim that as a tax deduction. So you might have put some in throughout the year. You might have put in 10 grand or something already. You can top that right up to 27,500 and claim some additional tax deductions this year. Obviously, a lot of these things are dependent on the cash flow situation. Like, it's never really worthwhile putting yourself under enormous amounts of cash flow pressures just to get a little extra tax deduction. But sit down with your accountant, talk about this stuff, sit down with Dan, talk about what the options are, and figure out how much cash have we got maybe that we can spend. And then you're gonna work out what's going to be best for your business, because it's very hard to kind of come across with a blanket approach for everyone,
Absolutely. No, look, and that's part of our process. that we do with clients is we sort of review a lot of their financials, especially in the June month, just coming into what it's looking like at the end of financial year. And we just work with accountants, obviously like Megan, to really come up with a plan. So anything that has to be set in stone prior to 30 June can all happen. So everyone's situation is very unique. So please reach out to your accountant or us, and we can definitely chat about it. So thanks for that, Megan. So next question I had was, what are some of the key dates? Obviously, there's a bit going on with the end of financial year and the new financial year starting. What are some of the key dates with lodgements and things that we need to be aware of?
Yeah, so I guess sort of the first key date is your trust minutes. So your trust minutes have to be done before the 30th of June. So they need to be done now. If you have a trust that you operate through and you don't get your trust minutes done by the 30th, the absolute worst case scenario is that the ATO deem that you haven't distributed your trust income to anyone, and that you have to pay the tax on that income at the highest rate, right? So you really just want to make sure that if you're operating through a trust, that you get those trust minutes done. Then obviously we've got all of those new financial year sort of key date areas where there is a fair bit of stuff in a short period of time. Your superannuation, so your superannuation, the normal due date for your staff super and stuff will be the 28th of July, right? If you do want to claim your tax deduction for the super, you probably should pay that sort of now so that you can claim it in this financial year. Superannuation will get deducted when you pay it, not necessarily when it's incurred, right? So I know that if you're using Xero for your super payments, which a lot of small businesses do, they're sort of suggesting to pay it by the 14th of June, which is in about 2 weeks, to just allow the processing time so that the money actually can hit the super funds by the 30th of June, so you can claim it in this year. If you decide not to do that, then the normal due date will just be the 28th of July next month. Then the other big one will be your single touch payroll finalization. So if you are paying any employees, and that includes if you pay yourself as an employee, you have to finalize your single touch payroll through to the ATO. So this is basically the new equivalent of your payment summaries. So back in the day, you'd go into, MyHub or whatever, and you'd finalize your payment summaries, and you'd send that out to all of your employees, and you'd submit the file to the ATO. So it's the same concept as that. You're just sort of finalizing all of the payroll that you've paid to each of your staff members for the year and just submitting that information through to the ATO. That is due on the 14th of July. And obviously the reason that is so early is just that they want that information so that all of your staff members can then go and do their tax returns. So they can't do anything until you finalize it on your side. A couple of other sort of smaller ones is we've got the TPAR, which is your tax payment annual reporting. That's big for people in construction paying a lot of subcontractors. So you have to report all of the information that you pay all of your subcontractors, how much you've paid them and their ABN through to the ATO. Then you've also got work cover sort of reporting, which is due end of August. That's another sort of not directly through ATO side of things, but another one that a lot of small businesses have and they kind of forget about. But yeah, they're probably the main ones sort of coming up in the next couple of months that people need to be aware of. So
perfect, thank you. And so just on that, with tax returns for either companies or individuals, what are the key dates on those ones when they're generally due?
Yeah, so most individuals will have end of October as their standard due date. Obviously, if you're going through a tax agent, so if you're using an accountant to prepare it, you're going to get extensions on that. And the extensions most of the time will take you through into next financial year, next calendar year, sorry. So you'd be looking at, sometimes sort of March, end of March through until the 15th of May for most businesses. So if you are using an accountant to prepare your stuff, you're generally going to have quite a lot of time to get everything ready. You're looking through until May next year before everything's going to be due.
Perfect. No, that's really great information, Megan. And what I'll do is I'll actually include these dates in the post as well, just so if people just want to refer back, I'll include them in the post. So thanks very much for that. I've just got one more for you before I let you go. From July 1, 2023, so the start of the 2024 financial year, what are the key changes, or are there any key changes for small business that have sort of come through, whether it be through the budget or that's going to be in place going forward at the moment?
Yeah, so I guess like the two main ones that will impact most business owners was going to be there's the super is going up again. So 1st of July will be at 11%. So it's 10.5 now, going to be up to 11%. Now, as long as you're using some kind of payroll software, Xero or something else, it's just going to automatically, you're not going to have to go in and do anything. It'll just automatically update for you. But just obviously for budgeting, planning purposes, making sure that you factor that in when you're hiring new staff members, packaging it up. Remember, it's 11% now from 1st July. And then one of the other big ones is just going to be the asset write-off. So that's going down to 20,000 now. So obviously sort of through COVID and the last couple of years, we've had it, $100,000+. You've been able to buy all sorts of crazy cool things and just write it all off in one go. But we're back to reality now. We're back to $20,000. So it pretty much means, if you're buying cars and stuff, like you can't write all that off in one hit now. It's going to go back into what we used to have, just traditional depreciation. You claim a little bit over the life of the asset. So they're probably like the two most relevant sort of ones without going into loads of details on the budget sort of stuff, which no one really cares about. And then I guess another one that's a little bit sort of left field is just more around budgeting and cash flow and just understanding, obviously everything's tightening, interest rates are sort of going up, and whether you're the business owner yourself and you're feeling the pinch, or if it's a case of all of your customers and clients and stuff, you might be struggling and losing work because people are tightening. I know like a lot of people in hospitality and stuff, hospitality is hard enough even at the best of times, let alone now where people aren't going out as much and spending as much. So really just working with people like Dan and making sure that you've got your budgets in place, you've got cash flow, you can understand you're paying your tax on time, just that sort of stuff that maybe you as a small business didn't need to be doing much and it was kind of all good. You had money in the bank, you could pay the bills. Just preparing kind of for worst case, just so that you're equipped and you're not going to find yourself in a bit of a shit situation with no money in the bank and, a heap of ATO debt or something. So planning for that kind of stuff as well is probably going to be a big one, like going into the new financial year as well.
No, that's really good advice there, Megan. And further to Megan's point there, budgeting and forecasting is really important. Whether you're doing really well or you're not, it's really important to understand what's coming up, at least in the next 3 months. It gives you 3 months then to plan, prepare. Obviously, we work with clients to do 12-month sort of budgets and forecasts, especially this time of year. But it's a really good idea to just get a really good handle on what is going on with your cash flow, and more importantly around scenario planning. So what happens if your sales drop 20% or 40% even, worst case, or if they go up 30% if you're having a really great year. So it's just to help plan for that. And as Megan said, costs are going up as well. So quite possibly the margins that you're making off a product or a service are shrinking as well. So with the cost rising, you do need to think about reflecting that in your pricing. It's not just as easy as just sort of letting it ride, because all that's happening is your margins are getting smaller and smaller. So some great advice, Megan. Thank you so much for your time today, and I hope everyone has a good day. Thank you.
Awesome. All right. Thanks, Dan.
Thank you.